Senator Moran.
Mr. Chairman, thank you very much, and congratulations to you. I want to be a good member of this committee, and this is my first hearing, and want to impress you. I assume that's done by speaking less than 5 minutes. I've read the audience. I want to talk just a bit about a broad issue and then a very specific one. We've had lots of conversations about small community banks, credit unions, small financial institutions. They certainly dominate the economy in Kansas and communities across our state. And in all the response to questions that have been given, and in your testimony, you indicate an effort to treat differently, to recognize the difference between a community bank. I would assume that you would agree that they are not a cause of systemic risk to our economy, and yet the constant conversation with community bankers, with credit unions, is very much about the regulations that are coming our way. This conversation predates Dodd-Frank, but it is exacerbated by Dodd-Frank. And so while I hear the regulators saying, we understand the problem, we treat them differently, there does not seem to be a recognition on the part of bankers that that's the case. My question in a general sense, are my bankers just normally complaining types who have it wrong, or are my regulators wrong in which they say we are taking care of this issue, we are not overly regulating community banks? And Mr. Shelby, in his question about the loss of small banks, the immediate response, Ms. Baer, by you was about the number of closures. That's a component, I suppose, of losing small banks, but what I've noticed in our economy is that it's happening by consolidation. And there are perhaps economic reasons that consolidation should occur, but my impression is that it is occurring because of the regulatory costs. In fact, I had a conversation with one of our large regional bankers who tells me for the first time in their bank's history, they are receiving calls from small community bankers saying, are you interested in buying our bank because we no longer can afford the regulations, it's no longer fun to be a banker, and the cost of being a small community bank now exceeds our ability to generate the revenues necessary to get a return on investment. So my question is, while we talk about treating differently community banks, the evidence, at least from my view, does not seem to be there. What are we missing? What needs to take place? I think there's great value in that community bank in making decisions, and I would issue the caveat, I'm not necessarily here advocating on behalf of bankers, but I'm here advocating on behalf of their customers, their borrowers, their clients, who in the state like Kansas or like South Dakota, it is a place in which our farmers, ranchers, small businessmen and women have the opportunity to expand, and I think there's a tremendous consequence to our economy, including job creation, in the failure of our banks being comfortable in making loans. And finally, in that regard, particularly real estate loans, I have had half a dozen bankers tell me, we no longer make real estate loans. You can't come to our bank and borrow money to buy a house because of all the regulations and our fear of the next examination that we have missed something that's going to then get us written up. Making a real estate loan is no longer worth it. That is a terrible circumstance in small-town Kansas, small-town America, in which the local bank is now fearful of making a real estate loan, a mortgage on a house. Your response?
Well, I would say a couple of things. I think you're right, there's been consolidation. There's still over 7,000 community banks out there, but there is consolidation that is always a byproduct of a financial crisis. The stronger absorb the weak, and that is what's happening here. We're very concerned about making sure that we have a vibrant community banking sector. It's not our job to serve community banks, it's our job to serve the public, but I think the public interest is served by having diversity in their choice of banking institutions. And I think, and I've said this repeatedly, throughout the crisis, we saw that community banks were doing a better job of lending than the larger institutions. And that's just a fact. We have very proactively tried to protect community banks from the brunt of the Dodd-Frank requirements, which I think are overwhelmingly targeted at large financial institutions. They, as I indicated earlier, our change in the assessment base is now reduced by 30% in aggregate the premiums that community banks will be paying for their deposit insurance. They are by and large exempt from the compensation rules that we just put out. We have tried to insulate them from these QRM rules on securitizations, as you'll see when those come out. So I think we have acted on a number of fronts to try to insulate them and strengthen their competitive position. And as I said, I think ending too big to fail and robust implementation of orderly liquidation authority will increase funding costs for many large institutions and provide better competitive parity. The interchange fee issue, I think, is a very real one. We are very concerned. We will be writing a comment letter. I think the likelihood of this hurting community banks and requiring them to increase the fees they charge for accounts is much greater than any tiny benefit retail customers maybe get for that, any savings to be passed along. I think that's just obvious to me. So we are very much hopeful that, I don't know if this could be dealt with by Congress, but what we're planning to do is work within the regulatory framework to see if there's greater discretion to provide better protection for community banks against discrimination, and particularly by networks. But I do think this is a real issue and could have an adverse impact in a way that was clearly not intended by Congress in enacting Dodd-Frank.
I've set a standard for myself, and the red light is on. I would like to follow up with you, Ms. Shapiro, about financial advisors by community banks in lending to, or making it perhaps advice to local units of government. There's a new rule issued January the 6th that's created great concern. And Ms. Baer, I'll be in your hometown a week from tomorrow. Thank you very much. Thank you, Mr. Chairman.
I will make